Hi, I'm Zorina Dimitrova, and welcome to the Grownlearn Podcast. Here I host thought leaders on business growth, transformation, leadership, and succeeding in life and business with a human focus. At Grownlearn, we are the only ones offering uniquely customized solutions to business needs using a cutting-edge AI business growth assessment tool and a global network of top-tier experts to craft and execute strategies that drive impactful results. If you're ready to grow smarter, book a call today at grownlearn.org and let's transform your business together. Enjoy this episode. I'm welcoming my first guest for 2025, David Hirschfeld. We're going to be speaking about launching software companies without the need for investment, launching them successfully, how to circumvent all the pitfalls on the way to success for growing a startup. Welcome, David. Very glad to have you as my first guest this year.
Yeah, thank you for having me, Zorina. I'm really excited to speak with you.
My pleasure. I'm very interested in the methodology you've developed and as a part of your product and hearing your story of how you got there. So would you like sharing a bit about you, how you came up with Launch First and what it is actually?
Sure. I'll give you a little background. So without getting into a whole history lesson here,
Sure.
I've been involved with software development now for 35 plus years. Started out with in the enterprise with Texas Instruments and Computer Associates, and then did project management work at Intel, Motorola, Allied Signal, Arizona Public Service. And so I was very enterprise oriented in the early part of my career. And then in the early 90s, started my first software company with an associate from Texas Instruments. And it was in logistics, route distribution, and inventory management. And our idea was to pick a small niche in that industry and to create software. It wasn't with the idea that we were going to build a big software company. We just wanted to sort of get our feet wet with a software product. And and Windows 3.1 had just come out. It was the first version of Windows that was really usable. And so we built a Windows product in that industry. And despite every effort on both our parts, we ended up growing the company anyway to 800 customers in 22 countries over the next 8 years and sold it to a publicly traded firm.
Mm-hmm.
So I had a successful exit. And so now I'm thinking I know what it takes to start a software company. I was VP of products for the acquiring company for the next several years until I left there and then started Tekyz a couple of years later. And with Tekyz, we worked with a lot of startup companies, over close to 90 startups now. The problem with startups is most of them fail because they lack product market fit. And the reasons I was successful in my first venture were not the reasons I thought I was successful. And I didn't realize that until I'd worked with several dozen software companies and watched them fail for reasons that I would not have expected. Uh, Most of them just wait way too long to start to try to sell their product and get revenue from customers. And there's no way to validate product market fit without getting without customers paying you. You can't rely on people saying, I'd use your software, it was out, because you don't know if they really would when it comes to actually having to write a check to use your software until you have a product that people are starting to pay for.
Mm-hmm.
So I came up with Launch First as a way of preventing my potential customers from failing by and what we do is we create these really sophisticated designs that are animated and look like finished product, but they're not. They're just animated designs. So we go to the market with these designs, and we also go through a very extensive niche analysis process to figure out who that early adopter is. And then we build a marketing stack based on how we expect to be able to sell the product. And then we create a high value opportunity to buy into this product early. And if you're solving a big enough problem that the customer feels it impacts them a lot and it costs them a lot, those are two independent numbers that we validate during the niche analysis process. and you're giving them a big enough value offer up front that they're afraid they'll miss out on it if they don't buy in now, and they know they're going to buy the software once it is available, then you can sell it even before you start building the product and in enough numbers to get what I call a viability barrier. And a viability barrier is that you're selling enough product at a high enough closing ratio for a high enough price that you can track a 3-to-1 ratio between your lifetime value of that customer versus what it costs to acquire that customer.
Mhm.
That's sort of the golden ratio for SaaS companies, 3-to-1. And you need that margin because to scale, you have to have enough margin in there to be able to reinvest back into your company. So the cool thing about Launch First is once you find well, a couple cool things. One is, let's say you don't get to that 3-to-1 ratio the first time you go out and you try to do your pre-launch sales. Well, we pivot, and pivoting is a 2 or 3 week process when you're talking about a design prototype and a marketing stack, changing your messaging, changing some of the workflows based on feedback that you're getting when you're trying to sell it for the reasons that people aren't buying it yet. We can pivot 2 or 3 or 4 times in the space of a couple months. Once you build your product, pivoting is costly and painful. And doing a really significant pivot is there's a lot of momentum against doing that because of the cost. And you're in panic mode usually by the time you start pivoting in a startup once you've built your product. But with Launch First, it's not like that. We can pivot quickly and retest the market with different messaging, different workflows, different demonstration. And once we find that magic balance and we're starting to sell at that rate that we need, that's the trigger to start building the product. And you don't
I
stop
think,
selling.
would
Yeah,
you
go ahead.
would you allow me to backtrack a little bit and
Yeah,
maybe
yeah, sure.
like reiterate what exactly you're doing? I absolutely get it, but maybe to um, just make it clearer for the audience that kind of didn't quite catch it. So what you developed is a process through which you can take companies to market, or rather work with a minimum viable product before they have actually designed their software product. You're working only with SaaS companies, software companies.
Yes, but not a minimum viable product. The minimum
Not
viable
even,
product
yeah.
means no, because
Mhm.
that you have to build.
Yeah, right.
You're building the software, and that's costly and risky.
Hmm.
We're not building an MVP. We're creating a design prototype that looks and acts like the real product, not just a click-through mock-up. It's beyond that, but it's not the product. And it shows the full vision of your product, not an MVP. Part of the problem with trying to sell your MVP is it's so limited in functionality
Hmm.
that people struggle to want to buy it because it doesn't have enough features yet.
Hmm.
What we're building is a design prototype that looks like you've already implemented the full 2 year roadmap
I
of your
see.
product.
And by a design prototype, just to clarify once again, you mean simply like a movie. You show them basically what it would look like if they enter, then use the software app or whatever they're using.
Yes, sort of, except that you're actually demoing it. You're clicking through it. The
Mhm.
behavior on screen is like the real product with data and drop-down lists. The navigation, the animation, all of it looks like you've built the product. And this is a critical success factor for doing pre-launch sales because the one question you don't want to get when you're showing somebody something that you're planning on building the is how do I know you can build this?
Right.
And if your product looks like just click through mockups, that's the first question you'll get. But if you build it, what's called a high fidelity prototype, where it looks like a real product already,
Hmm.
then even though you tell them this isn't the real product and the first version may not have all these features and it'll be 3 months out, people will make up a story in their minds because that doesn't fit with what they're seeing. They'll think, oh, they must have developed it, but they're in QA, just testing it now or finishing a few features, even though you never say any of that. You tell them the truth, but they don't hear it because it looks so real.
How do you ensure that the software is built within the predefined deadline or time frame? Because usually the software, I know from experience and also from talking to a lot of people that there are a lot of promises in the software developing world. It's going to be done by that and that deadline, and it takes a year longer to
Oh,
develop.
oh yeah,
Yeah.
yeah. So this has to, and that's really the right question to ask, to be honest with you. So if you go to techies.com, you'll see it right at the top of the homepage above the fold. It'll say hyper exceptional software development team.
Mhm.
That's what we actually do is build software, but we're not just a software development team. We're a really exceptional software development team. I say hyper exceptional. And I don't just say that, but I always say to people when somebody tells you they're good at something, ask them for evidence. What does that mean? And we have all kinds of evidence about how we track projects, how we transparency, the level of detail when we do estimates, the accuracy of our estimates in terms of showing estimates versus actuals in our status reports. Um, and we're within 10% of our estimates. That's our goal is to always stay within 10% above or below. We don't want to be any more above we don't want to be 30% ahead because that means that we're just sandbagging in the estimates. We don't want to be behind because that just means that we didn't consider all the functionality or, the estimate wasn't detailed enough. Um, it didn't have enough knowledge in it. And so we're really good at it. And it's funny because I talk with a lot of other software development companies, CEOs of other companies that do software development, and we talk about estimates. And very often I'll hear, yeah, yeah, we always do pretty detailed estimates, and I ask them if they'd like to see how we do it, and they always say yes. And then I show them how we do our estimates and what they look like, and they go, oh, no, we don't do estimates like that. That takes way too much work and too expensive to get to that level. But we always do.
Mhm.
That's one example. Um,
I
the
understand.
way
So,
we run
so,
our status meetings,
so,
the
so
way that,
basically, with
yeah.
launch first, you have combined the software company with the business advisory model. So you're in a
Mhm.
way ensuring that the startup is succeeding. So it's like a mixture of a few businesses.
Some people have called it a de-risking approach
Uh-huh.
to starting a software company, uh, because what we're doing is we're mitigating most of the risks, um, uh, and giving the founder a much higher chance of being successful. And in the case where they can't find that path to that viability barrier, past the viability barrier, they're just not able to do it for maybe it's the wrong product in the wrong market, the wrong time, then they can say, which every software company that failed wishes they could say this, they failed fast and cheap
I see. Well,
instead of,
say,
yeah.
talking about cheap, I don't know what the average investment is, generally speaking, for a startup in a software company. But I know that your costs, or not your costs, but the cost the startup should expect are somewhere around 80K for
At
the.
a minimum, at a
That's the
minimum,
minimum. That's the minimum. Okay. So
80K.
how does it pay off for them? Are they and is it comparable to the initial costs they would have were they to raise money or proceed in a different way?
Yeah, so that's a good question. So, and when I say 80K is a minimum, I'm talking about getting an MVP, a solid MVP out to market. That may not be a version that you can sell yet, because what most people do is they'll put out their MVP, they'll do free betas. They usually wait way too long to get the MVP out, and they keep adding features to it. But once the MVP is out, they rarely start charging for the software on the MVP. They usually are doing free betas to get feedback from their customers, and
Mhm.
their customers are giving them feedback. And these are customers that haven't paid for the software yet.
Yeah,
And it's hard to get people to use your free MVP because they're not invested in the software. And there's all kinds of problems with this approach. And very often that might be anywhere from 6 to 12 months to get the MVP out. this is typical. Not that it can't happen faster, but typical. Sometimes it's even longer. And then it's another year, usually with releases, going back and forth with releases and feedback from customers before you feel the product's got enough functionality now you can start to charge for it. And that's usually when they find out that people don't want to buy it, 2 years after they've started. And now they're in panic mode. So with with launch first, instead of waiting 2 years to start to sell your product and find out nobody wants to buy it, within 3 months, we're out there marketing the product and very often starting to sell the product successfully and generating revenue. And one of the things I try to convince people of is give a very high value purchase opportunity. That might be a lifetime license, or it might be free implementation in the case of something like a a CRM or an ERP product or a clinical trial software, bigger software products where the implementation costs are more than the actual software itself, or whatever the high value trigger is that the buyer would perceive as being high enough value that it's worth them taking a risk on something that isn't built yet.
Mhm.
And by doing this, you can generate as much or more money from a measurable fraction of percent of your market
Mhm.
versus giving away 10, 15, 20% to investors. And all the work you're doing to sell these customers is all work you doing to build your business, designing the product, building your marketing engine, creating a sales and marketing message. These are all things you have to do to build your business. Nothing you do to raise money is helping you build your business. Creating
That's
pitch decks, going out and trying to get in front of investors and selling, right? And then if assuming you're successful and you start selling your product now, you're built, which is the trigger to start building it. Now, if you do want to accelerate your growth and development, having a converse by raising money, having a conversation with investors is completely different because you can show traction, market traction, you can show growing revenue,
Mhm.
um, and you don't even have a product on the market yet.
Yeah. How long does it take for the customer to get their product using this approach for the final customer?
I usually tell people figure 3 months from the
Three
time
months
we
only.
start. Yeah, to get to where we start to market. Yeah.
No, no, I
Or we're
mean the final developed product that the end customer of your customers is purchasing. So until
okay.
the product is
And
developed,
okay.
the
So,
software is developed.
the are we talking about the MVP? Because there's no such thing as a final product if you sell something that's successful. That's the beginning once you put it
Well,
on the
what
market.
you've
Start
agreed to
selling.
sell them to begin with.
Right. So we'll talk about MVPs.
Mhm.
So it depends on the market. It very much is very dependent on the market and the product and the level of sophistication. A typical product was probably 4 months to get an MVP done. Anywhere from 3 to 6 months, I'll say. Just like I said, depends on level of sophistication. Some take 9 to 10 months to get an MVP done. Some can be done in 2.5 months. But that's the typical. And there are some that are even longer than that. But these are really big, sophisticated products that have a lot of R&D involved. Now, one of our favorite projects, again, this has to do with being an exceptional company as opposed to just a regular software development company, what I call recovery projects. These are projects from customers who have been working at building their product very often because they were promised that the first version would be available in 3 months, and it's 18 months later. They still don't have anything to show, and what they do have is so buggy that they don't trust it.
Mhm.
Uh, I call those recovery projects. And sometimes we can just take the project with the code base that's there and work forward. Most of the time, we have to start over. And we always do a full assessment with a very detailed report on the quality of the code and the architecture of the application and things like that, so that the user can make an informed decision if they want to go forward with that. Um, but that's very common when you're dealing with a typical software development company. it's very hard to nail down when you'll actually have something that you can that you can start to give to customers that won't embarrass you.
Yeah.
With us, it's when we put an estimate together, the estimates are accurate, but we spend a lot of time putting these estimates together, and those estimates don't cost our customers anything.
Yeah. What is your success rate with helping startups launch software companies?
So what with we've done with Launch
With
First,
launch one first, yeah, with
with
launch
Launch
first.
First, right? With Launch First, um, with our first four projects that we did, three of them were successful, which is a really high percentage. I'm not suggesting that we're going to have 75% success rate with it. I figure it'll be somewhere between 25 and 30% when we have a larger number pool of this. But with our first four, one was a product that was for aerospace parts distributors, and this was a product that managed the project, what it's called, the certification certificates. Every part that goes into an airplane or aerospace has to have a certificate that says this part, when it was made, what it was made of, and if it's an assembly of other parts, every one of those parts that went into it has to have its certificate
Mhm.
with the new certificate. And so you can see this becomes a complicated process to manage. And so this product was for that specific process. We did three demos to three parts distributors and sold all three of those demos for $15,000 each. So in a space of a few weeks, raised $45,000 in pre-launch sales. Um, for a real estate investment portfolio management product, we sold in 2 months, we sold 23 licenses for $68,000. And and these are not promises, but these are actual checks that we're
Mhm. Mhm.
receiving for people buying in. And a third one was for clinical trial software product. And we did two demos, sold both the licenses for $250,000 each. So raised $500,000 from two clinical trials, and and the fourth one was for housing, subsidized housing for Native Americans, and that one we started right after the pandemic started, and there was no way to get a hold of anybody, any Native American tribal authorities, because the pandemic had shut everything down, and so that one failed.
Mhm.
Uh, but so that gives you an idea of the types of projects that are very successful with this.
Mhm. Is there someone you or a company you would say, I cannot help you, I cannot work with this type of company with this type of setting? Is there?
Yeah,
Yeah.
yeah, there are. So one would be product like a public social network where anything that your business model is based on critical mass of users, that's not going to work with Launch First. That might work in a crowdfunding scenario,
Mhm.
or if you're have a product that you're marketing to the public in general, and it's a very low um, uh, subscription fee, for example, that's not going to work with Launch First. If you
Yeah.
don't have a high value potential target customer, so even in those cases, you might be going after like um, uh, uh, organizations where they're going to buy it on behalf of large number of users. That would be a target that you could use for to go after.
Yeah.
Um, um, Business networks where you've got a buyer and a seller, they can work really well if these are high value buyers and sellers. But if it's again, if it's more of a mass market buyer and seller market, like if it's Fiverr or something like that, Launch First would not work for that.
So you would say it's more adaptable to B2B types of
Yeah,
businesses.
it's ideal for B2B.
Yeah,
Yes.
yeah. Okay, so while you were speaking, got me thinking about the legal aspects of not meeting the expectations of the customer contract. So in case the product could not be developed, for whatever reason it fails, and the
Mhm.
final customer doesn't get their, whatever they've paid for? What are the legal implications for the startups, and are you accounting for these?
Yeah, so I tell people that when they start to create sales, one of the things they have to do is provide a guarantee to the customer that a first version, an MVP, will be available by a certain date. Maybe say if you were expecting the product to be ready in 4 months, then you maybe say 6 months.
Mhm.
And there's a couple different ways of doing a launch. One is the classic pre-launch sale, like what we're talking about, where you're selling a product, but the first version won't be out for several months. Another way is what's called the concierge launch, where you're selling them on the concept, but they can start to take advantage of the service because it's more of a service-oriented system that has a sophisticated software that manages it. And now you cobble together some workflows and resources of WordPress and Google Apps scripts and maybe Google spreadsheets or whatever you need, whatever the different pieces that you need to start to provide the service, and you manually manage the service and provide start to give them the service within a few weeks of the purchase. And then you can handle a certain number of customers this way while you're building the system. And it's a great way to launch. We've run into a number of projects where people are doing this as a way of validating, basically doing launch first as a way of validating their service and learning how to run their business from a service perspective before building the software. I've got several customers like that.
Mhm.
It's a very successful way of doing it, where one is in certified certified providers for certain types of education, where she's gone to these organizations in education organizations that would be needing these service providers, and just using paper forms and a little bit of automation and pre-selling this service to those organizations and manually managing the certified providers and providing them and now building the software for this.
I see.
So that's an example, and that's a great way to launch, a better way to launch even than just pure pre-launch sales. But to answer your question, you just have to be willing to commit to getting it to them by a certain time, and the ability to refund them if you, for some reason, can't.
Mhm.
Like if you realize that in the really rare case, you came up with some kind of software concept, you realize it's just not possible to do it. I mean, this is super rare, but you realize while you're building it, you can't do it. Now you have to be willing to refund all your customers that you've done the pre-launch sales to.
Mhm. Mhm. I see.
That's pretty uncommon, though. We haven't had to do that yet
Yeah.
with anybody. So it's
Let's talk
not
a little bit
likely
about
that'll be the case.
marketing. How do
Sure.
you help customers market their, um, what is it called again? Not minimum viable product, but
High
what was the
fidelity
term?
prototype. Yeah.
Yeah.
High fidelity prototype.
Hmm.
So uh, it starts with our niche analysis process, because one of the secrets to this whole thing is identifying who is the early adopter, what's the early adopter niche, who is the stakeholder in that niche with the high value problem and the high perceived impact of that problem. These are two distinct numbers that we measure. And the reason they're distinct is you could have somebody that perceives a problem is huge and they hate it and they want to get rid of it, but the cost to them is really very low. So you
Hmm.
can't charge them very much for this thing, even though they want to get rid of the problem. Whereas you have other users that have a really high cost to a problem that they struggle with, but they don't feel very impacted by it because everybody in their industry struggles with this. This is a known quantity. Why I'm not really motivated to do anything about it unless now you have to sell me on why I should be motivated. So we look for both those numbers, high motivation and high cost, because then we can easily get their attention, because as soon as you talk about the problem, they go, I hate that. And they'll lean forward and say, can you fix that for me?
Hmm.
And the cost is high, so you can charge them a lot for it. So once you find those two things, now you know who that early adopter is, or
And how do you
you
find it
likely
out?
early adopter.
Do you?
It's a method. It's part of our methodology.
Mhm.
It's one of the things I created out of a frustration I had working with marketing companies who always say, well, give me your ideal customer profile.
Yeah.
When I would say, this is a startup, they don't know who their ideal customer profile is yet,
Mm.
except in rare cases.
Yeah.
They think they have some idea, but there are many different niches they can market to. So which one should they focus on?
Mhm.
Because the tighter you can make the niche, the smaller you can make it, the more you can charge and the higher the closing ratio. Uh, because you've got that high impact and that high cost. So this is part of the methodology I created.
Fantastic. So, how can people get to know a little bit more about the product or maybe get a consultation with you?
Sure. Go to techies.com. And if you're watching this video, you can see Techies spelled above my head. If you're not, it's Tekyz. That's how you spell Techies. So techies.com. You'll learn about my software development company. And if you want to learn about Launch First, at the top of the page, you'll see a menu for Launch First. Click that, and that takes you to the Launch First page, which then tells you all about what we've just been talking about in a little bit more detail, with some cool animation and things on the page, and a video that describes it, what I just talked about. And there's a bunch of people that I have presented this to over time that talk about what they think about. And these are very well-known startup coaches and accelerators.
Fantastic. Thank you so much, David. Anything else you would like to share so that we get a full picture? Anything we've missed
Oh
about?
yeah, and
Yeah.
uh, I'm just starting my new podcast. It should be out next week, called Scaling Smarter.
Hmm.
So please look for me there. And uh, and yes, the last thing I'll say is if you've got an idea for a project or you are struggling with an existing developer trying to get your project out, it doesn't cost you anything to reach out to me, and I will do an evaluation, pull together requirements in quite a bit of detail, and generate an estimate for you. And there's no obligation and no cost to you to do this. And like I said, this is a lot of work for us, but we just feel like this is a service that everybody needs. Um, and it's just not, and we figure that we'll just make you so overwhelmed by what we're capable of doing that you're going to want to work with us if that's where you are in your business. So,
So how can people book a call with you through the website? There's a
yeah,
way,
yeah.
or do they write
Go
you?
to the website
Mhm.
or reach out to me, David at techies.com. Techies again spelled Tekyz.
Fantastic. David, thank you so much. Scaling to, what was it called?
Scaling smarter. Scaling smarter.
Scaling smarter. What are you going to be talking about on scaling smarter?
On Scaling Smarter, we're going to be talking with um, startups and scale ups and talking to them about how they've used AI and automation to help scale their business, or and alternatively where they're struggling or where they've been stuck in their business, and doing a little podcast brainstorming
Yeah.
about how to get past it.
Fantastic. I'll also put the link or the at least the name of the podcast in the description to this
Right.
video and audio. David, it was a pleasure. I learned a lot. It all makes a lot of sense to me. Thank you so
Thank
much.
you. Yeah, and thank you for having me, Zarina. I really enjoyed the conversation.
Thank you for listening to Grow and Learn. We hope that you found our podcast informative, engaging, and inspiring. Our mission is to help you keep growing and learning, and we hope that our conversations and insights have provided you with practical advice and useful perspectives. If you're looking for personalized support and guidance to help you achieve your personal or professional growth objectives, I offer a range of services to help. As a trusted management partner and mentor, I work with businesses in the process of transformation, looking for new streams of business as well as M&A. With an extensive professional network of experts and mentors, I can bring on board the right person or team based on the specific needs of the company I'm working with. To learn more about the services I offer and how I can help you achieve your goals, please visit my website at grownlearn.org. You can also reach out to me via email or social media. I'd love to hear from you. And if you enjoyed this episode of Grow and Learn, please subscribe to our podcast and leave us a review. Your feedback is important to us, and it helps us to continue to create content that is relevant and valuable to our listeners. Thanks again for listening, and we look forward to sharing more insights and perspectives with you in the future.